Good morning, ladies and gentlemen. Thank you so much for joining us today on our Inspired Individual series. This morning, we actually have Mr. Shan Saeed, who's the Chief Economist at Juwai IQI with us. Good morning, Shan.
Good morning, Ernest. How are you?
Fantastic. Shan, for the benefit of our listeners out there, can you let us know with regard to what does the Chief Economist at Juwai IQI do, and also what gives you the ability to be the Chief Economist there?
Basically, Ernest, at Juwai IQI, the role that I am pursuing is that we guide corporate clients on global macro. So Juwai IQI is not a real estate brokerage house. It's a platform where sophisticated and smart investors, they get to know about what is happening in the global macroeconomy. They get market intelligence report. They get to know what is happening in various regions, how various central banks are making the maneuvering, how various governments are pursuing fiscal stimulus, how that fiscal and monetary stimulus, it makes an impact on the economy, how infrastructure investment has strong correlation with GDP growth. So everything for IQI at Juwai IQI is analyzed at macro level. It is always the macro that drives the economy, and all the industries, whether we talk about real estate, whether we talk about oil and gas, whether we talk about manufacturing, whether we talk about E&M, everything boils down to one thing, and that is macroeconomy. So if macroeconomy is on the upsurge, all the other industries are on the upsurge. As you know, I'm living in Malaysia for the last 8.5 years, and people have been saying that real estate property market is into bubble and market is going to crash. For our last 8 years, we have been hearing these stories. But why real estate in KL has not gone to that phase? Because the land prices are not crashing. Bubble happens when the land prices are crashing. That is a sign of a bubble. So I think a lot of our clients who follow Juwai IQI, they know that at IQI, Juwai, we are only interested in the market intelligence report, on the ground information. It is backed by facts and figures, which is based on critical analysis, which is based on market-based approach. And most importantly, why clients, they follow Juwai IQI? Because of a strong market standing and credibility in the market.
I understand. Can you let us know as well with regard to your background prior to coming on board Juwai IQI? What has allowed you to have this breadth of in-depth economic knowledge? And obviously, how does this relate to the property prices and where you see the property prices post-MCO in Malaysia and in the region?
My background has been that I have been in this industry, financial market industry, for the last 19 years. I started off with a development financial institution. Then I moved to a foreign bank, a British bank. Then I moved to US. I worked over there. And then I finally moved to KL in 2011. So my background, it entails me to engage with customers and clients who want to know what is happening in the global macro. I was fortunate enough that since at Juwai IQI, we have got very strong market intelligence report about Belt and Road. I was invited at World Bank annual meeting, courtesy my professor at University of Chicago, who recommended my name. So I had the first-hand experience and my sharing of knowledge at that platform at the highest level. Plus, I was invited by the World Chinese Forum to share my expertise on the energy market. As you know, I have been following energy market for the last 20 years. So a lot of clients, they respect me and they recognize me, not only for our expertise in real estate, but also on commodities, especially in energy market. And as you know, your life and my life, it all depends on oil and gas. And oil and gas, it holds significant value for any economy in the world. My background, my credentials is that I have got my first MBA from Pakistan, second MBA from US. I have been trained in alternative banking strategy from Harvard Business School. So this is my brief background. As far as property market is concerned, post MBO, as you know, our first quarter result at IQI has been quite impressive. We have gone over 1 billion ringgit, and we continue to see a lot of enticement and interest of those sophisticated and smart investors who value real estate as the new global currency. And in these turbulent and tempestuous times, investors who understand history and economics, they've always taken position in two asset classes, that is gold and real estate. And the third asset class that has become very significant is cash. If you pick up Financial Times newspaper exactly 3 months back, Warren Buffett holds $130 billion. That is massive. So why an investor like Warren Buffett holding $130 billion? Because he can foresee a lot of opportunities in the market. And whenever you have downturn in the economy, you have opportunity. Somebody is making money and somebody is losing money. To say that, in downturn you cannot make money, I don't buy that argument. In any distressed situation, you have a lot of buying opportunities. And the buying opportunity comes, when you have cash. And cash gives you financial and economic empowerment, and it gives you the power to negotiate at the highest level. So I think post MCO at Juwai IQI, we still foresee that market will move in a very structured manner. The growth that we foresee is between 3 to 4%, and investors will continue to park their funds in real estate.
Do you foresee that there will be a dip in property prices first in the meantime, before stabilization and upward trend, or do you see plateauing?
I think in the short run, yes, we might see the market softening, but then yes, the market will continue to be on the upside because of one reason. China is coming back into the market. And as you know, Malaysia is an important player in BRI equation. So for China, Malaysia holds a significant value because of her geography. Since China is back in the market and we see full throttle by Q2 this year, the consumers are spending so much in China after the lockdown has been over that we foresee that spillover to other regions. If you allow me, I can share the data of first quarter that Juwai IQI received from those Chinese clients. 24% are interested in Thailand, 9% are interested in US, 62% are interested in Canada, Australia 15%, and Malaysia, again, it holds a very important value. All these variables, it all goes to one thing, that investors from China, they continue to see ASEAN as a growing region. And why ASEAN as a growing region? Because of modern infrastructure, because of macroeconomic stability, because of lifestyle stability and financial stability. So for those Chinese investors who hold $2.3 trillion of their savings, of their wealth, they want to park funds. So these destinations are very important for these Chinese clients.
Do you foresee that amongst the Asian brothers and sisters that we have, Malaysia would be one of the key areas that we're looking at, or would our surrounding regional country partners be benefiting more from it? Because you mentioned just now that Thailand actually has significantly higher level of interest in China from Chinese buyers.
Yes, Ernest, we are showing that Malaysia, Thailand, Vietnam and Philippines, these are the four regions in ASEAN that are being on the global investors' radar, especially from the Chinese side. And Chinese have since are opening up and they are moving out. They are looking at it from a very strategic angle. So when we talk about strategic angle, we are talking about for the next 10 to 20 years. So we foresee a lot of funds flow coming into these regions, especially in the real estate. We have witnessed a lot of funds going into Penang. A lot of funds are going into KL. So these are the regions that in Malaysia that would have significant value for those investors who are looking at the long term.
Are they looking mainly predominantly for residential or industrial or land to invest in?
That's a very interesting question, because after the trade war, a lot of Chinese companies are planning to relocate, because before that they did not have that contingency plan. So some of the regions that I can pinpoint: Malaysia, Vietnam, Philippines, and to some extent to Thailand, but mostly Vietnam and Malaysia have got a lot of significance for industrial relocation. And for real estate, yes, Malaysia, Vietnam, Philippines and Thailand, they hold significant value for those Chinese clients.
You mentioned something very interesting, that because of the non-geographic spread of production and everybody uses China as the factory to produce things, and because of this contagion, what's happened is that they realize that they cannot just depend on one country or one source only. Do you foresee that Malaysia will benefit in terms of skilled precision work, or this is going to be very menial, laborious, intensive work that will be coming here?
Ernest, as you know, Penang is the manufacturing hub for Malaysia. And a lot of Chinese companies, when they look at Malaysia, the first thing they look at is the Penang. Second, they look at the skill set of Malaysian people. 95% of Malaysian labor force is tech savvy. everyone has got smartphone. Plus, in Malaysia, everybody speaks in proper English. So that's the biggest advantage that, for those companies who are trying to relocate to Malaysia. So after Singapore, that has been saturated right now. The number 2 country, I would say, is Malaysia. Number 3, I would say Vietnam now, which has come up very strongly. 4th is Thailand, and 5th is Philippines. So this is the category wise we see in terms of productivity, in terms of skill set, and in terms of being tech savvy.
Shan, do you see that due to the recent government stimulus package that they are announcing to try and get the economy back on track, do you see a devaluation in the ringgit? And if that's the case, then would it be more attractive for investors to look at Malaysia then?
Ernest, I think ringgit will maintain structural stability. Since November, we have been saying that ringgit will meander around 3.97 and 4.30. Ringgit did touch 4.40 exactly 4 weeks back, and now ringgit is trading at 4.36. So it has appreciated 2% against USD. If you look in the last 17 days, US dollar has lost 7% of its value against pound sterling. It has lost 4.3% of its value against Canadian dollar, and it has lost 2% of its value against Malaysian ringgit. It has lost 1% of its value against Chinese yuan. So we foresee US dollar will continue to stay weakened because it's an election year. US dollar will continue to stay low as compared to basket of currencies. Malaysian ringgit, yes, it will have a structural stability. For Q2, Q3, we have said the fair market value of ringgit is between 4.15 and 4.30. As far as your question is concerned, fiscal stimulus, Ernest, nothing will happen overnight. It takes time. Yes, the government has come into the picture. As you know, 2 policies, that is monetary policy and fiscal policy, have got significant value in these turbulent times. And monetary policy, yes, the Bank Negara has done its part by lowering the interest rate by 50 basis points. Now it is a fiscal policy. So I think the government has come into the picture, and they understand that they have to support the businesses. They have to maintain macroeconomic stability, and they have to support the momentum in the economy, because everybody has got one focus, all the governments. 161 countries are locked down out of 195. 82% of the countries are locked down, and there is no business. So the only way forward is to provide fiscal stimulus to give confidence to local investors. Once local investors have confidence, only then you'll be able to attract FDI and you will be able to attract foreign investment. So I think government has done strategic move, and they want to support and they want to bolster the economic confidence so that local investors, when they come back after MCO, they have the same vigor and energy to pursue their business.
One of the things that you touched on about with regard to the fiscal stimulus is actually to also help the SME community as well, because without the SME communities, jobs will be at stake, and also definitely the cycle and the ecosystem of how money will move. Do you currently see that because of the MCO, a lot of SMEs are under pressure to perform and under pressure to even survive? And if that's the case, then what's going to happen if they can't survive, and what's the cascading effect on the economy?
Yes, as SMEs are going through some very challenging phase, that is understandable. But at the same time, I would say SMEs are the backbone of Malaysia. That's why the government has come up with a 10 billion stimulus package, because they understand the importance of these SMEs. They contribute significantly to the job growth. They contribute significantly to the exports. So I think, yes, SMEs will be facing some turbulent times in the short run, but eventually the business will come back. It will be BAU. But what I would like SMEs to do moving forward, in order to face these challenging times, they have to do only one thing. They have to keep investing in the skill set of people, because suddenly something comes in and you don't know what to do because you do not have any contingency plan, or you don't have plan B or plan C. So you always need to have plan A, B, C in place. And one of the things that SMEs can do in Malaysia, and they have the ability, they can do it, is they invest in people, invest in technology, and try to understand the global macro and how to relate those global macro and bring it back to Malaysia so that they can make economic and financial sense, and they can be able to make their business strategy taking into account the global macro situation. So I think investing in skill set, understanding the global macro will drive the economy forward and will give more financial and economic empowerment to these SMEs who hold significant value to the overall GDP growth.
I think what you answer is actually quite succinct in the sense that, SMEs and just like any other businesses have to invest in their people, has to invest in what is Plan B and Plan C all about, because the global structure now is so fluid. Anything can happen very quickly and contingent effects happen very quickly as well. So can I bring it back to in terms of the micro level as an individual in Malaysia right now, in order to take advantage of what you've mentioned in terms of the regional opportunities that are at play, what can Malaysian investors do right now to participate and share in the new wealth, in the new reality coming forward?
Yes, that is very important. Follow what the governments are doing. Follow what the sovereign wealth funds are doing. Follow what the central banks are doing. Follow what the big players are doing. Just follow them. If you go against them, you won't be able to succeed. So follow what the big players are doing. Big players are nowadays investing in technology. Big players are nowadays investing in logistics. Big players are now investing in services. Big players are now investing in real estate. Big players are now investing in tangible assets. As you know, stocks and bonds, they're taking huge hit. And we sent a newsletter to our clients in January this year, and we mentioned that equity markets, investors will lose $25 to $30 trillion in 2020. You will be surprised to know by Q1 this year, investors have already lost $30 trillion just in one asset class, because equity markets are not based on reality. Equity markets are based on printing presses unleashed by the global central bank, especially by Fed and ECB. So valuations are now coming back to their fair values. Again, the market will take correction. So for individual investors, I would advise them and I would advocate, try to understand the market. Do your homework. Don't follow anyone. Don't follow Shan Saeed. I can go wrong as well. Do your own research. Get the market intelligence report. Ask your colleagues. Read magazines, and then you take position in an asset class. Because once you have taken a position, it is not just you can offload your position tomorrow or overnight. So try to understand the future. Try to understand the markets. Markets are always forward-looking. So once you understand the market, once you have done your homework, once you have got market intelligence report, then you make smart decisions.
Shan, on a personal note, what are you currently looking at in terms of investing for your own personal portfolio? Are you looking at real estate? Are you looking at commodities? Are you looking at precious metals? Are you looking at anything else that you're looking at right now?
Ernest, I follow what sophisticated and smart investors do in tough times, real estate and gold. I have started looking very closely at cobalt. As you know, in EV market, cobalt holds significant value. So cobalt going forward, I think the prices will appreciate. And I would say to your clients, in tough times, the only fixed asset that goes up is land. And IQI is dealing in land. So try to take position, park your funds in tangible assets. If somebody tells you, I can give you 30%, 40% returns, don't fall into that marketing gimmick. Nobody can guarantee you 30, 40%. If you can preserve your wealth, if you can get 3-4%, if you can have peace of mind, that is much better as compared to going through sleepless nights.
Definitely. Well said. Well done. Last question before I let you go, Shan. In the new reality that will be coming about because of this complete upheaval, and I do think that a lot of companies and countries around the world will be looking at different production houses and not just relying on one. Malaysia would probably stand to benefit from that because of our young workforce and also because of our ability in communicating in the English language as well. But do you see this as a comparative advantage that we will be able to capitalize on for the long term? I think other countries in the region are also investing in their people to also speak in English and also to increase the technology and the speeds of broadband and whatnot. How fast need we pivot to keep ahead of the curve if we want to come out of this very well? If not, we will just be like everybody else, right?
Very important question. Yes, in the next 5 to 10 years, only those economies will succeed or will move faster where people are tech savvy. Yes, everybody is now catching up. Malaysia, the beauty of Malaysia is people are tech savvy, they're productive, they speak in proper English, but other countries are also catching up. So how do you keep yourself ahead of the game? You keep investing in technology, try to upgrade your skill set, especially in terms of AI. Try to embrace, what is happening at a very fast pace in logistics, in warehouses. These are some of the things that nowadays clients are now looking at. Do you have expertise how to manage logistics? Do you have expertise how to manage warehouses? The other expertise that very few people are talking about, the critical reasoning. I have seen how people have moved much ahead in terms, if they invest in the critical thinking. And companies are still looking for those leaders, whether we are talking about manufacturing, whether we are talking about banking industry, whether we are talking about any other industry. They are looking for those leaders who can think critically, who can understand what is happening in geography, how you understand foreign relationship, how you able to connect the geopolitical risk in order to make the business decision. So I think critical reasoning, understanding AI, embracing technology, these are the skill set. And most important, people have to pick up Chinese language. I still remember when I met Jim Rogers, when I was studying at University of Chicago, he advised me something. And he said, Shan, you have to learn Chinese if you want to stay relevant. In the next 5 to 10 years, 1/3 of the global economy will be dealing with China. By 2025, China will become the biggest economy of the world. So if you want to stay relevant, you have to know what is happening with the biggest economy of the world. And the biggest economy of the world, they only talk to you in one language, and that is Chinese. So I would advise your people to pick up Chinese language. There is no harm. It's always better. You improve your skill set. You stay relevant to the market.
Great. Thank you so much, Shan. Very good advice for all listeners as well, and myself included, that to stay relevant, we have to continue to evolve. So the adage that the only thing that's constant is change. Thank you for your time. Thank you so much for your time and your insight, Shan. And we hope to catch you again soon to get an insight with regard to what's happening in the economy and how it's going to affect us as Malaysians and also our partners in the region as well. Thank you, Shan.
Thank you, and thank you so much.